Okay, good evening everyone. Good morning, good afternoon, good evening. Hope everyone is well. We'll just do a quick sound check if we can, thanks. Can I get a loud and clear? Okay, good evening. Just do a quick sound check if we can, thanks. Can I get a loud and clear? Okay, thanks everyone. Bit of lag there by the looks of it. So, g'day everybody. G'day Kevin. And I think that is juristic, if I've got that right. So I think you might be new. So welcome, VJ, Midas, Full Reverse, Nikki, Hansi. Sorry, hang on one sec. Okay, Kevin, I said Kevin, John, Tezza, Alice. Okay, we're a couple of minutes early, so we will start right on the hour. But yeah, welcome to anyone that's new. Tonight is a question and answer session. Specifically, g'day Mukesh, very good. Perfect sound. It's a pity about my voice, is that right? G'day Vasilica. I think most of you have gotten used to the Aussie accent by now. I'm not quite as bad as some. So anyway, we've got a question and answer session. Questions from the Trading Academy in particular, or just general questions. Now, I do have quite a few questions that have been sent in, which is terrific. So g'day Bluefin. So I've got some great questions for tonight, some different questions. And VJ has come up with a couple of questions, which are always not challenging. They're always make me think as well. So anyway, so there we go. So great questions. So a couple of minutes and we will make a bit of a start. G'day, Steve. Hope everyone realises that we've got some pretty news heavy sessions today, end of today and tomorrow. So, as I said at the start of the week, just be careful trading now. We won't get normal market movement. So, if you do see some setups, maybe just go a little lighter. In other words, reduce your risk back. So, if you trade with one lot normally, maybe go back to 0.7 or 0.5. And just be nimble because the markets will move against us. And if you've got open positions, maybe reduce those and maybe bring your stop up. If you've got a bit of a buffer, maybe take some profit off the table already. So okay, we're nearly there. We're a minute off. So we will make a start. So. Now this is from our Monday. This is from Monday. On Monday we usually do a trader quote, and here's one from one of my favourite educators, which is Brett Steenbarger. Now what he says here, and it was funny that the timing of this was ideal because last week we spoke about, and I spoke about on Friday, the importance of taking your own setups, taking your own trades, being accountable for your trades, but more so playing to your strengths. So the thing with trading is, if we're not good at certain setups and certain patterns, the good thing is we just don't have to take those. But that's in terms of patterns, but if there's things that really resonate with us, they're the things that we should be really going hard with. So what Brett says here is making the most of strengths and learning how to work around. All right? Notice he said work around shortcomings produces optimal performance results. So the things that we're not comfortable with, you work around those, or you just get rid of them altogether. So let's give an example of this. As I said before, if you find that perhaps analysis is not your strength, then don't spend hours and hours trying to analyse charts, and you might find that your strength is perhaps being a little bit more intuitive, where you might see price made a decent move, it's coming back, and then you can see that there's momentum starting to come in. That might be something that you see and something that you started to develop a bit of intuition with. So, stick with this. Don't try the breakout patterns. You might find that they're not your strength. You can't pick those. You get caught. So leave those alone and stick with these ones here. That's what he's talking about. So the example that I gave as well was also that the example I gave also was, if you see somebody posting something in the chat room or something like that, don't feel that because you don't understand it, don't feel that you're missing out on anything, because that's not the case at all. There will be certain things that you don't pick up on, but somebody else picks up on, and certain things that they don't pick up on that you pick up on. So, learn to be your own person. Learn to discover what your strengths are and what works for you. And, in trading, that is the hardest part. Now, folks, just let me know if the stream drops out as well. I'm getting a bit of a mixed connection my end. So just let me know if it drops out. I can see it on my other computer, so it looks okay. But just let me know if it does drop out. So, all right, let's make a bit of a start. So, the Trading Academy, Module 1 to 5, questions and answers if you've got them specifically, so that we can go through in order. Now, thanks, Kevin. Now, I've already got a few questions, so we may not be able to deal with any, but if you want to remain anonymous, just let me know in a private message. I haven't got my emails up now, so just send me a private message and we'll try and answer those. So, okay, let's have a look. All right, now I'm going to answer one just quickly in some of the, because this one will be easy to deal with. So what is this in my watch list? And what is this? A D with a little W and 2. Okay, so this one here is, sorry, and I should have said that, short term, ST equals short term, and UT equals uptrend. It's not part of a stutter. So short term uptrend is that one. And then this one here, D for daily. W is my wave count, and 2 is the wave that I think it's in. So I think that was pretty easy. So short-term uptrend and daily W2. So that would be prices come down and price appears to be in here. So here's our 1 and our 2. So price appears to be in this sort of setup. So that's it there. Very good. Very good. So I'm sorry about that. I do sort of abbreviate. It's just what I'm used to, just what I do. Okay, now I'm going to bring across just bear with me a moment. Sorry about this. So I've had some great questions. So I'm going to deal with these in order. Just going to pop that just to the side so you can see these as well. So the very first one here is from Steve. And Steve has said, do you believe in mirrored price action where a strong move up can be mirrored almost exactly by a strong move down? If so, which pairs are more prone to this? So this is from Steve. I'll put a couple of notes here, which you probably won't be able to read. It's probably a bit small, but I'll tell you what I think about that particular question. Tell me if I've got this right, Steve. Quite often we will get price will move in what I call an inefficient move. Actually, let me just start with trending markets will move in this sort of fashion. And of course, we can place our trend line across here. So what this allows for is profit taking, reload, thrusting move up, and so on. And then we get our reversals and whatnot through here. When we get these big moves like this, and especially where we've got bars, perhaps single bars, what it is it's an inefficient move through here. And quite often there's of course this fear of missing out, this FOMO, because traders have gotten in long on these overextended moves. We haven't had an opportunity for it to naturally pull back and reload. So what ends up quite often happening with these, especially when it's sharp, is that now you've got to remember also the institutions have been piling in back here. So this is all just cream to them. Now, there's an old saying as well where we sell into strength. So you can bet the institutions back here have also been selling into strength up here. So they're pretty much out of their position. So what will happen is any sign of weakness, and quite often the market will dump. You see, the market doesn't like these inefficient or these moves where there's sort of in equilibrium. So it tends to come back and correct deeply, but doesn't break the trend, but it will do these inefficient moves. Now, there's another one. Let me just clear this. But also don't forget that price distribution, traders have been loading up all the way here, and traders remember these areas here as well. So the institutions that have been distributing through here, they're all in profit through here. So there's really, what am I trying to say here? No, that's probably not a good example, sorry. Let's use the example of the V reversal. So price comes down and makes a climactic move into here. So here's our inefficient leg once again. Quite often what price will do, it'll either create a cradle down here that allows for profit taking, and what it will do is, because such a decent amount of profit's already been made here, there's no reason for a nice orderly move. So quite often we will find that price basically just comes back. Oops, supposed to be the eraser. Price will often come straight back very hard to the point of initiation. And then we'll find price does what it needs to do and then it moves off. So that's what quite often creates these voids, price voids, and then they're never easy to see and they're never easy to trade. The price moving down, and then we get the big move, and the cradle is reasonably easy to see because we're suspecting that this is not going to push lower, or there might be some support here. So we're suggesting here that price is possibly going to push. They're easier to see, but these V reversals quite often aren't. So quite often, Steve, what it comes down to is basic just inefficiencies. We might get a price comes up and does our typical break, and then we find that it quite often tests the breakout level because this move has just gone too far too fast. So they're about it's a good question, Steve, and there's some of the things that I've just noticed and some of the things that I've learned. But at the end of the day, we're never really going to know the exact reasons. But as I said here, what I do spot quite often is that price will come back and test these breakout levels. So I hope that sort of answered in a bit of a roundabout way. I've even seen where price is able to move up, and then we get a bit of an area here, then price will do a big move. As it comes down, it will look for this area, and then it will move in a more orderly fashion. So we could call that our anchor. It is just a bit of a phenomenon, but yes, sometimes price over time will move to these huge areas. But I think what you're maybe referring to is these inefficient moves. Is that right, Steve? Possibly. All right. So Steve said mirrored. Steve's call it mirrored price action. So do you believe in mirrored price action where a strong move up can be mirrored almost exactly by a strong move down? Yes. And if so, which pairs? Which pairs? I'm not sure, Steve. I haven't really tested this. But this, he's already just asked it. You asked it right at the same time, Steve. But this sort of phenomenon will appear in most pairs. But my guess is, and I haven't tested this, my guess is the more volatile pairs, Steve. Perhaps a pair like GJ, something like that. So there we go. I hope that's answered that one. So that was what I had, inefficiencies and V reversals. So now our next question is from John Trading. And this is a fantastic question. John has said, how do you distinguish the difference between a pullback and a trend reversal? So that's John's question. I've put a couple of, which I'm going to push this into. So I'm going to push the answers into the stream for us as well, if it'll let me. G'day, Morphus. All right, there it is there. Okay, so that's my notes and my comments. So let's go over and let's have a look at this and discuss this. So fantastic question. So what's the difference between a retracement and a reversal? So let's have a look at normal price action. Normal price action has these, as we said before, these areas that can and need to just get rid of, allow for profit taking, allow for buying pressure to come back in. So normal, let's call it a steady state trend or a stable trend. Now, during the course of this, we will get just a normal price pushes up. And then, of course, we get our pullback and away we go. Now, what we don't want to see, what have I said here? Okay, what we don't want to see in our pullback area, of course, is in here. We don't want to see large topping patterns. So this was one of them. So we don't want to see double tops because you can bet people are going to go trying to go short in here. What's my other? We will have a look at some examples as well. So I'm going to tell you what is a giveaway to what we don't want to see. And Steve basically nailed it before. We get these big moves like this. These are the ones that are more likely to be big sharp moves. So we don't want to see these inefficient moves. So what's just as important, John, is the price leading into the pullback. This is it here. So that's one. We don't want to see a sharp push. We want to just see nice price action, and if anything, maybe a slowing of momentum. Now, one of the key things is our trend anchors through here. Now, the last video in the Trading Academy, which is in Module 5, speaks about these anchors. So number one, the last thing we want to see, John, is this penetrated. So this is our most recent swing low after price breaks here. We don't want to see this one penetrated. Now this is on your trading time frame. You might have so let's say our weekly, daily, and a 4-hour. Preferably, we don't want to see the daily trend anchor broken, and preferably we want to see the 4-hour one intact as well. So that's one thing that we don't want to see. We don't want to see this trend anchor broken. Even though it might shake out here, it's basically freaked everybody out down here. So we don't want to see the break through the trend anchor. What we don't want to see also, now this is what we don't want to see, is a weak pullback here and then a sharp move here. Because what I haven't spoken about yet is this is also a definition of change of trend, but only when we see price acceptance in this area. Now, is that a little bit small, folks? It probably is. So, in other words, here, I don't want to see a price acceptance here because here is our change of trend definition before the anchor. Okay, so even in a normal, nice trend, the last thing we want to also see is a large thrusting bar against the trend. Now, some of you have heard me talk about a 3-line strike. That's a different bar again, but you see, when we've got nice steady price action through here, we've got a big bar against it here. What is the reaction of most market participants? Right? It's surprise. So what is going to occur on the next pop? Right? This guy here is feeling fear. You can tell. You can tell. I need to get some drawing lessons off VJ, right? So he's gonna puke, isn't he? He's gonna start to puke here. So we don't want to see sharp bar in here, and quite often too sharp a move back up here hasn't let all the supply from here get taken out. Right. So they're going to jump out here. So there's more of a chance that they're going to then push this down even harder. So those that have gotten caught in here and haven't gotten out, and even the longs from here, are probably going to put their stops under here. So this sharp price move in here is probably going to get forced selling through here as well. So that's going to create this change of trend as well. And probably, you know, a sharp move here. So that's one thing you need to look out for, a sharp move against it here, and then a pullback here, because the supply coming in here hasn't had time to get absorbed. Okay, so some other points here that we don't want to see. Maybe a break of our trend line. Oh, sorry, guys. No, you won't. Yeah, I can only draw on the one below, sorry. Yeah, sorry, guys. Right, so with this trend line break here, people, of course, are going to be shorting there as well. So there's another reason. There's another thing to watch out for. Now, yeah, okay, I'm using PowerPoint, so it's probably not easy. Another thing may be your key moving averages. So let's say we're using a 20 period. We don't want to see a sharp move through that, because what's the chance that it's going to come back up, test, and try to break again? So there's some of the things as well. Let me just read back up. Okay, so let's have a look at what we do want. It's probably now's the time. Oops. Okay, sorry about that. Okay, we're back right in the middle of everything. So let's have a look at what we do want. So we want price to come down shallow, like these here, like this one here. All right? We want price to come down generally no more than 61.8. of this move here. So this might be 38, 50, 61. So generally we don't want price to come down too much more than this, because what that's going to do is, you see, Fibonacci traders are going to be buying at these different levels. So we want to see not a deep retracement. The other thing we want to see, let me just get rid of a bit of this. Oops, got rid of a bit too much. Leading in, we just want to see nice price action. What we want to see, if we get a single pullback, we want to see evidence in here of wicks, so buying pressure coming in. We want to see, candle patterns in here. What we also want to see is here is, this might be our 20 period. We want to see price come back to an area of value that we know others are probably going to buy after us. We want to see the momentum in this leg here not as strong as this one here. So ideally, here's our up move. We want to see the down move nowhere near as strong in terms of momentum. We also don't want to see projection. We don't want to see, as we said before, we don't want to see a deep pullback, because this is probably an indication that it's starting to distribute. Just the same as with our trend, we don't want to just see a mild projection above like this, because a mild projection above a deep retracement, this is a chance that this is probably starting to distribute. So that's not what we want to see. So we want to see this low momentum. We want to see the evidence of buyers coming in. And we want to see this area here come back to an area of value. And also, if you know how to use time, $10 bars, we want this retracement, and you've probably seen me do this, to ideally be 3 to 6 bars. Oh, I haven't spoken about this before, have I? So, 10 bars, 3 to 6 bars. Right, so, or 3 to 6 bars correcting sideways like that. So, the ideal trend. Now, the even better ones, 20 period, roughly. I'll just get rid of that because it's in our way. The ideal pullbacks, and the ones that I like, are typically our A, B, Cs. The reason being, this leg here and a nice steady trend here. This leg here allows for those that haven't taken profit in here to get out. And also, when price pulls back to this level here, there's an attempted trend change. And when price pulls back up into there, we've got trapped shorts in here. So where are they going to typically bail? Here, and push price up. Their stops are going to be here and probably here. All right, so these three swing retraces, oops, that's probably not good, are even better than a single leg. Single leg pullback. ABC pullback. 20 period. 20 period. Now, in strong trending moves, see this first pullback here? This could be a 10 or an 8. And this could be a 20, 21, it doesn't really matter. It's an area, it's just a reference area. So this pattern here has allowed traders to absorb the supply. So the areas that I'm watching for is when it pulls back in. Okay, whoops, I've missed the... Right, so how do we go with that one? Let's have a look at an example. Just bear with me, folks, and I'll just swap screens and we'll have a look. Then I can come back to this one. Yeah, here's a good one. All right, here's a British pound. All right, British pound daily. Nice up move, a little bit of a thrust. See the gentle pullback. Push up, gentle pullback. Push up. See, it hasn't gotten out of control, but it's got fairly high. And now we have got a bigger pullback. So we've had our ABC here. Now, let me just show you some of the ones that we looked at. See this one here? See the 3 swing retrace. See, oh, here we go. Here's a 20 period. Yeah, come on. Yay. See this one here? Push up. A, B, C. See here, we haven't got any big thrusting bars. No big thrusting bars, just gentle profit taking. Not trending. It's just gentle profit taking. See the shakeout around the low? Existence of candlestick patterns in here. So we've got an A, B, C, and then we've got a little double bottom in here. Sorry. Can you see it here? See the existence of the white up bars as well. Double bottom. So here's our push up. Here's our double bottom. See, price is just rolling around here. And up we go. See here. Gentle pullback. Hammer type candle right on the 20. Here's our bigger corrective. See here? Well, this is a large double zigzag WXY. But let's have a look at the breakout. See here? And if you're listening, Fire Sword, there's a couple of GANs techniques that I won't share here, but there's a couple of GAN techniques that I learned as well. So see here, we've got the push-up, probably no more than 61. Well, actually, let's have a look at it. This is the daily chart of the pound, current. There you go. 60, you probably can't see it, but that's the 61 right there where my cursor is. All right. Let's have a look at the next one. 50. See this? This one here. 1, 2, 3 bars. 1, 2, 3 bars. 2 bars. So how many we got here? 1, 2, 3. It was an inside bar. 4 bars. And probably 1. So there's our 30% time. So see this one here? Gentle pullback. So obviously we don't see it until such time as it is starting to move as evidenced by this candle. I would take above there, and I think I did. Now that was that was without doubt a terrific topic, because it occurs all the time. See this big move here? See how it's deep correction? See here, it broke the anchor. See the big thrusting bars? Here we go. Here's a couple of good ones. Big thrusting bars. G'day, Fame of me. Sorry, I'm having to go back. Sorry. Yeah, here it is here. See here? Big thrusting bars. Right at resistance. Whereas look at these ones. Thrust, nice pullback. Thrust, nice pullback. Alright? This one here. Go back and study them. Let me show you something. Right, here's my playbook. See this here? Pullbacks, all. See them all? Look at all the different types. Let's have a look at the ABCs. Look at them all. Right? This is how you get good at it. Here's one from the other day. Dollar CAD. Yep. Okay, there's a single leg. There's my trade. There's one the other day. Dollar CAD. See the little ABC in here? Back to the 20. Push. See the bar here? Well, there's an enormous. I've got an enormous amount. That's what you have to do. Okay, here's a 3 minute and a 1 minute. See this? 3 minute. What does it look like on the 1 minute? So there we go. All right, so they're all different types of pullbacks. See it here? Breakout pullback, complex pullback, double bottom, double top pullback, higher low, lower high. Look at all these. If you want to get good at trading, this is what you've got to do. Look at these ones. Look at all these examples here. This was such a good example. I even drew it up. See here? Look at them all. One here, here. And have a guess what chart this is. This is Euro Aussie 1 minute. Every time frame. Okay, very good. Okay, back to our questions. So how's that, Steve? No, it wasn't Steve. Bear with me, guys and girls. It was John. So there you go. I hope that helps. Thank you, VJ. You're not the first to say that. Okay, so I think we've dealt with that for John. Some of the things that we do look for and some of the things we don't look for. Now, Bluefin has said, I saw you draw a downtrend where we had an uptrend with peaks and troughs. Is it feasible to take profit at downturn and then re-enter on the way up? Is it profitable? So, now this is what you're asking, Bluefin. Is it profitable to buy in here? Sell out at the first sign of a downturn and then buy back in here? Well, that's the theory. Right. Now, I'm not being condescending, Bluefin. Please don't think that. But as you saw from our examples before, we've got to try and pick these areas without a doubt. It may take, and you've seen my examples as well, where I've actually gotten in here, because the 20 is coming in here, but I've had my stop enough away down here that I'm allowing for the second retrace. Sorry, the second leg. Right? So, and then I've taken another order here when I see that we're getting this shakeout. So, I mean, ideally, Bluefin, yes. The best that I can say to you here is never be frightened to take profit, but obviously not too early, but sell into strength, especially when we see price getting climactic. All right? Now, if you've gotten in here, here's our trend line. See, price will naturally come back to our 20 here. So this could be the top of the channel through here. So never be frightened to take your profits in here. Now, if you're not sure and you've got a decent position, take profit here and maybe just drip. This is a word that we call a saying. Just drip some more orders out up here until such time as you jag the top. Now, you'll know that as well. It's like jagging the bottom. You're jagging the top. Sorry, jagging the bottom is like this, as you know. We've gotten in here. Price has really sunk. You've taken profit here. Just keep taking a profit out until you believe you've jagged the bottom. So where's your average exit? About here. That's pretty good. You've got to be happy with the meat of the move. So, in saying that, Bluefin, this is ideally what we try to do in practice. It's a lot messier. Right? But if, as we said before, if you get those sharp moves, yeah, definitely, because the chances are it'll come back. All right. Very good. Okay. How much time have we got? 15 minutes. Okay, now VJ has given me a question. And I think a few of you know what's coming, don't you? I think we answered it last time, VJ, so I'm going to do my best to answer it. But it's pretty long. Now, we did answer yours before, VJ, too. See this one here? I think you asked a little bit the same, but you've given me some charts. So let's have a look at VJ's questions. But I'm just warning you, it's not going to be easy. Sorry, when I say it won't be quick. So just bear with me. Okay, here's VJ's question. So what VJ has said here is, being an outlet wave trader, as an analyst, it's easy, but being a trader, it is very tough to achieve the pips. Well, absolutely. You've heard me talk about the necessity to trade what you see and not what you think. See, as an analyst, it's easy to come up with all this analysis and think that I'm right. Think that I'm right in my analysis. I'll give you a quick example. Down here. Think that I'm right in my analysis down here. But this is why I wait for these anchors or these swings before I start getting in. So it is difficult. The more you know, the harder it is. But you've just got to trust your judgment, VJ, and you've just got to step up and place the trade. They're two different tasks. So you've got to take your analyst hat off and say, right, how do I now trade this? Just because you've analysed it for an hour doesn't mean that it's going to go your way. So you've got to flip, you've got to basically move out of that mode and jump into trader mode. And yeah, no, it's not easy. I did in the academy, I did half a video on it as well. So now VJ said here, if we understand the wave trend, patience is the key. Place a stop and take profit, and forget the remaining. Only watch not to trade in the middle. Here is an example where I've made a mistake. So the very first example VJ has said, I had a trade set up in copper and expecting a pullback, and I exit with a small profit at the wave 1, expecting wave 2 for an end and catch the third wave. It didn't come as I expected. Finally, I missed the whole move. Now, copper. I think I've got these in order. Yeah, yes, I have. Okay. All right, I'm going to take a screen grab of this, VJ, because it's the only way I'm going to be able to do this. Okay, now what VJ is saying here is VJ's entered down here. Actually here, have a look at this for our extended move, our inefficient move. There you go. There's one for Steve. Now, remember I said to you about the initiation point? See, price has come back and paused at it. See right here? Anyway, I'm getting off topic. Now, so VJ's entered in this region here. And I'm guessing his stop is down here. So he's done his analysis here. And we're expecting this to go up. So VJ's put his position on here. He's caught, what's the time frame on this chart? Okay, 60 minute. So VJ's basically caught this whole move here and he's taken profit here, expecting this to be wave 1 and move back down as he's indicated here. So what I'm going to say here, VJ, and after our last lesson here, what I'm going to say is this, and this will answer a few of the other questions. Right, let me just let me just simplify this. So here's our move. So what VJ is looking for is then the second wave. So he's entered in here. He's got an incredibly short stop here. He's thinking this is wave 1 and this is wave 2. So what VJ's done is he's exited here for, I'm guessing, probably a 3R or a 4R, which is pretty good in any case. So congratulations for getting the analysis right, VJ. What I'm going to say, because we discussed this last time, this position here, what you need to do is you need to treat this one in its own right. What you need to do here, VJ, is you need to think of this as position 1. Let's call this P1. What you need to do is this point here, where you think, remember, we're thinking, trade what you see, not what you think. You've taken profit here. Now this is okay, but maybe at this point here, take 50% of P1 off. The reason that I'm saying this, VJ, is because when you're trying to add another position, you've now got the psychology of both of these positions acting on you. You're better off saying, this is my first position, I'm going to treat it as my first position. I've taken 50% off at T1. How big's that? Okay, that's big enough. But what I'm now going to do is let the rest of P1, I'm going to treat it differently, and I may even stop the rest of it out here or here, and then I'm going to be looking for, in here, I'm going to be looking for to take and put position P2 on. So what this will do for you, VJ, is you're treating both of these positions as separate positions, not one big trade. I think if you do that and you manage these separately, in other words, P2, as we know, you're going to have your stop in this same position here, the stop loss here. But the good thing is, from P1, you've already taken 50% off. Or you might be happy that you've taken, 50% off. If this pullback occurs, you can then initiate P2, position 2. But the good thing is you've treated P1 like a separate position or separate trade. You've already taken some money off where you thought it was going to end, but you're giving it the opportunity to run, to let that other 50% run. So you've already banked something. So even if P1 stops out, you've still made money on P1. Right? So we've treated P1 separately. Now, if you get into P2 with a slightly smaller position, remember our pyramid from last time. 6 lots. P1 is 3. P2 is 2. And P3 might be one lot. So we've got 6 lots in total. So we're pyramiding in, but we're still treating these differently. So P1 was 3 lots. P2 is 2. even if P2, even if it pulls back the way that we've said here, and P2 stops out as well, you've still taken probably 3R, you've taken one lot off, something off, or half of it off here. So your stop out is not going to be anywhere near as much as taking a full stop out. What it sounds, and this is not an easy question to answer either. Let me just clear all that as well. What it sounds to me like, VJ, is that you've taken the money here, and when your pullback is occurring, because you've taken nothing off the table, what's happening is it's affecting your psychology in this area here. Now, I know that's not the case with this one here. Here's your first trade. We've moved up. It's come into the area that you've thought take something off. So my suggestion is take 50%, as we said before, of this position off, P1. Because what's happening is if it's running, now you've still got 50% running. But what's happening is when it's coming down here, what's happening is because this P1, you've had all of this profit here on the table and you haven't taken anything. When it's coming back here, you're fearful now and your psychology is being affected because you've now given back a percentage of these open profits. So you're hesitant now to enter in here. But I can guarantee if you've taken 50% off, you'll be more likely to enter here because you've already banked some green. You've already banked some money. So my suggestion is treat these as two separate trades in your own mind, VJ. And P1, take part of your money off the table. So, okay, that was a bit of a roundabout way. So what that's going to do is when you've got price moves up now, you've still got a trade on and you still haven't entered P2. That's okay because we're now getting more profit out of this leg with one position. So let's have a look at some of your other trades, which is this one here. This is gold. So he's entered down here. So he's got a very tight stop again. So you're well in the money here and you've exited the full load. You see, the good thing also here is with this P1, position 1, oops. Position 1 here, taken 50% off here, you're more likely to hold position 1 as it's pulling back. But you can also decide if it's getting too deep, you can bring your stop in to break even. And if price does fall apart, you've still taken something, but you've given the trade every chance to work. But it just hasn't worked. So you can say to yourself, I've taken something off. Right? So in this example here of copper, same again. We're expecting the pullback and try and add in here. It hasn't happened. Sorry, this is gold now. This is gold. Yeah, gold. So what's happened is we've exited here and we've missed this move. Now, once again, if you've taken profit off here, as the price is pulling back, you're more likely to hold it lower and let this run. So even if you don't add, you've still taken advantage of this move. Now in hindsight, you can see the pullback here is nice and orderly. Now, pyramiding in is easy to say, but it's not easy to do. What you have to do is work out a way to protect your psychology, and that's one of the ways that I know. Let's have a look at another example. Okay, this is the euro, and this is current. And then right? And then we better sign off. So, VJ has entered here. So he's entered around here. And look where his stop loss is. What do we got? Tiny move. And we can see here we've got 15 pips. Stop loss. That's pretty small. Especially when, what's the chart? 60 minute I think he works on. So, and he's waiting to take profit here. Now price obviously didn't quite get here, but look at the amount of profit that we've got on the table, VJ. What have we got? 5R, 6R at least? That's a fair bit, right? So where's price? Okay, 12450. 12450, we've got, what's that, 30 pips? No, we've got that's 300. So we've got 20, no, that's not right. Sorry, it's your chart is throwing me a little bit. No, it's not 300, it'll be 30. No, sorry, it's 100 and, so it's 200. 121,650. Yeah, it's nearly 200. So you've got 10 R's on the table. Well, that's pretty good. Right? 10 R's. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. You got 10 R's at this price here. Well, when you see this weakening, when you see this trend weakening here, VJ, you want to be starting to get out of the position. Just take your profit anyway. Because now, once again, okay, you mightn't have hit your take profit here, but you might have still taken 40% of your trade off. You've heard me talk about trailing bar by bar when you get near your target. Stops here, stops here. So if price comes back, but my previous might have been my swing here, but as soon as I'm getting near the target, I'm squeezing my stop up because I don't want it to come back down. This might be 100 pips. I'm happy to take 85 if it doesn't get to my 100. So by having 10 R's on the table, VJ, 10 times your loss, and then it comes back to your second entry here and you've taken nothing, I reckon my psychology would be getting out of whack. Right? I don't think I would be able to handle that either. And that was your question, that you're finding it difficult after this pullback. Now, you're beating yourself up because this first trade you've given so much back. So my best answer to you, VJ, is start taking profits. Start ringing the cash register. When you've got this much on the table and you've given back quite a bit here, it's no wonder that you're beating yourself up. No wonder you're being hard on yourself. When you see price moving hard against you here, take something off the table. Take money off. Even if you're trading with 0.02 lots. Take 0.01 off here. You've got to have a bit more active trade management, VJ. So to sum that up, VJ, and I know that's probably answered it in a roundabout way. P1, position 1, operates in its own way. 50% off. Then your second order is P2. Right? P2 is triggered. P2 is its own trade. Big move. Right? Now it's time for P2. We'll also take 50% off. Right? So what you're doing is you're gradually reducing your risk. Right? You're gradually reducing your risk as the trade is progressing, but you're not strangling it. I think you'll find that doing that will make it a whole lot easier. How's that, VJ? Okay, very good. I mean, look, the best trade management technique is going to be the one that we work out in hindsight. Okay? We're never going to have the best trade management at the time, but what you have to work out is a trade management method that works for you the majority of the time. You've seen the way that I trade. I'm very much taking money off the table when it's there and then trying to let the remainder run, because same thing. I know my psychology when it pulls back is exactly the same. The problems you're having, VJ, they're nothing unique to you. They're not just you that's having these problems. These are common problems. But by taking something off all the time, not only are you getting that endorphin rush, but you're gradually reducing your risk. Let's put it in terms of a different way. As price is moving up, our stress levels are here. When price is moving against you and you haven't taken anything off the table, I can guarantee your stress levels are getting even higher. But if you've taken something off the table, taken some money off, I can guarantee your stress levels down here. So even when price does go against you, it might only come back to the original position. You've got to keep lowering your risk, lowering your exposure as you can. And I mean, that lesson is for everybody as well, especially when you get these big surging moves. Right now, Steve mentioned it earlier. When we get this, we've got a nice pullback. Yes, we've got a fantastic entry in here. We've added to it maybe here, very small. Price is moving up, and then we get a big move, like we're getting now. Take profit off the table, because I can guarantee that'll come back down, as we've just discussed. When you take something off the table here, when you do get the move back here, your stress level's gone down to here because you know you've already cashed in, cashed half your position out. Be happy getting the meat of the move. All right. Very good, everybody. Thanks for the questions too, guys and girls. They were great questions. Then I think in a roundabout way we answered them and probably more. So, yeah, that's right. Shrewd's nailed it as well, right? And yeah, that as well, VJ. Look, I touched on some of the psychological things once before. Number one, the very first thing is practice mindfulness. In other words, be aware of all of your thoughts. I'm not going to go into it now because we don't have time, but be aware of what you're thinking. Try and remove yourself as if, someone's watching Mark. They're watching how I'm behaving. Right? Okay? Right? So could you imagine somebody watching me? Can you imagine somebody thinking my thoughts? They're gonna think to themselves, seriously? Is that what you're thinking? They'd be thinking to themselves, I can guarantee the very first thing they're going to be thinking is calm down. Okay, I think we're losing the stream. Anyway, I mean, look, that's a topic for another time. And you need to go into these things in detail to do it justice as well. So all right, everybody. Good session. Generally, if I miss my day stream for whatever reason, internet out or personal reason or whatever, then I'll do a Tuesday, Wednesday or Thursday night, question and answer or something as a catch up. So that's a great time to answer these questions in full. No, all right, very good. Okay, everybody. All right, thanks for your company. Thanks for the great questions as well. So remember, price action is king. And now, did you notice we didn't reference any indicators other than the 20 period and maybe a 10? Price action is king. Context is queen. And remain disciplined. All right, everybody. Take care. See you tomorrow for the Asian session review. Okay. Bye now.